Today, we've got breaking IRS tax relief news for Americans age 65 and older for the 2026 tax year, and you need to know this before you file your return. The IRS has officially confirmed a major new tax deduction that could put hundreds of dollars back in your pocket every single month if you qualify. This is real. This is confirmed by the IRS and AARP, and this is for tax year 2026 returns filed in 2027. We're going to break it all down step by step. Who qualifies, how much you can save, how to claim it, income limits, and pitfalls to watch out for. Let's get right into the 2026 IRS Senior Tax Relief Update and exactly what it means for your money this year. What exactly is the 2026 IRS Senior Tax Relief? For the 2026 tax season, the IRS is rolling out a new senior tax deduction designed to help older Americans on fixed incomes lower their federal income tax liability. This is not a rumor. This is confirmed in IRS announcements and supported by ARP advocacy. Here's the key point. If you are age 65 or older by December 31, 2026, you may qualify for a special senior deduction of up to $6,000 on your federal tax return. If you are married and both spouses are 65 or older, you may qualify for up to $12,000 total. This is in addition to the regular standard deduction and any other deductions you normally receive. This is a real dollar amount you subtract from your taxable income, meaning it could significantly reduce your tax bill or even eliminate it entirely depending on your income. This deduction applies whether you itemize or take the standard deduction, making it simple and widely accessible. How much could you really save? Here's where the numbers become meaningful. Up to $6,000 in deductions. Potential savings of $500 plus per month. Here's why. When you reduce your taxable income by $6,000, that reduces the amount of income the IRS taxes. Depending on your tax bracket, which for most retirees is between 10% and 22%, that reduction can mean hundreds of dollars in real savings. If your taxable income drops by $6,000 and you are in the 15% tax bracket, your federal tax bill could drop by about $900 total for the year. That's roughly $75 per month in savings just from this one deduction. But that's not all. When this deduction is combined with increased standard deductions, adjusted tax brackets for inflation, and reductions in Social Security tax on some retirees, many seniors are estimating savings of $200–300 plus per month when everything is combined. And for some retirees, especially lower and middle-income households, the deduction could eliminate federal tax entirely, meaning you pay zero federal income tax in 2026. Who qualifies for this new senior tax deduction? To qualify for the 2026 senior tax deduction, must be age 65 or older by year-end 2026. This is the key eligibility rule. You must turn 65 on or before December 31, 2026. Must file a federal tax return. You still need to file a return, even if you don't normally file because your income is low, because that's how you claim the deduction. Income limits apply. This deduction begins to phase out for higher incomes. For single filers, phased out starting at about $75,000, modified adjusted gross income, MAGI. For joint filers, phased out starting at about $150,000, MAGI. The deduction completely disappears once income rises above roughly $175,000 for individuals, $250,000 for married filing jointly. This means if you are near or above those income levels, you may not get the full $6,000 deduction. But for millions of lower and middle-income retirees, which includes most Social Security beneficiaries, this makes a huge difference. How it works with your regular standard deduction. You already get a standard deduction on your federal return each year. For 2026, single filers age 65 plus get a standard deduction of about $16,100. Married couples filing jointly get about $32,200, and the senior deduction is additional on top of that. So a married couple over 65 could potentially have a total deduction of $32,200. Standard, $12,000. Senior bonus, $44,200 in deductions before income is taxed. For many retirees, that means the first tens of thousands of dollars of income is essentially tax-free. This new senior tax deduction does not completely remove federal taxes on Social Security benefits, but it can significantly lower how much of your Social Security income is taxed by reducing your adjusted gross income, which is the main number the IRS uses to decide whether your benefits are taxable. Under current IRS rules, depending on your total income, up to 85% of your Social Security benefits can be subject to federal income tax, especially for retirees who also receive pension payments, IRA withdrawals, or part-time work income. When your adjusted gross income is reduced through this new senior deduction, it can move you below key IRS income thresholds, meaning a smaller portion of your Social Security becomes taxable, or, in some cases, none of it at all. This is especially important for seniors living on fixed incomes, because even a small drop in taxable income can lead to meaningful tax savings over the year. So while Social Security may still be taxed for some retirees, this deduction can reduce the amount you owe or even eliminate federal tax on your Social Security when combined with the standard deduction and other available tax breaks. How to claim the deduction. IRS filing tips. Here's what you need to do when you file your 2026 tax return. Step 1. Don't forget to indicate your age on Form 1040 or 1040-SR. The IRS uses this to confirm you qualify for the senior deduction. Step 2. Claim the additional deduction. Whether you use tax software or a tax preparer, make sure the $6,000 senior deduction is entered correctly. Step 3. Evaluate itemizing versus standard. In most cases, the standard deduction plus the senior bonus deduction will be best. But if you have big medical, mortgage, or charitable expenses, sometimes itemizing could still save more. A tax professional can help run both scenarios. Bigger picture, additional IRS changes for 2026, affecting seniors. This new senior deduction isn't the only change for 2026. The IRS also announced higher standard deductions. These help everyone, but seniors benefit more because their total deduction rises even further. Adjusted tax brackets. The IRS adjusted brackets for inflation, meaning you can earn more before moving into a higher tax rate. These bracket changes help slow bracket creep, where inflation pushes your income into higher tax brackets even when your real purchasing power hasn't increased. IRS operational challenges. It's also worth noting that the IRS is facing staff shortages and filing season delays, which could affect refund timing or help center availability this year. We'll explain what retirees should expect in a moment. Real savings examples for retirees. Let's break down real-world scenarios showing how much seniors could save with this deduction. Scenario number 1. Single retiree on Social Security plus IRA income. Social Security, $24,000 per year. IRA distributions, $24,000 per year. Total income, $48,000. With standard plus senior deductions, taxable income could drop to zero, meaning no federal tax owed at all. Scenario number 2. Married couple with mixed income. Social Security, $40,000, pension, plus IRAs, $50,000, total income, $90,000. With combined standard plus senior bonus deductions, taxable income shrinks dramatically and taxes owed can be hundreds lower compared to 2025. Many couples in this income range could save $200 to $300 per month in federal tax relief. These are real numbers seniors are already seeing this filing season. The new senior tax deduction is not unlimited, and this is where many retirees need to be careful. Once your adjusted gross income goes above $75,000 if you are filing as a single taxpayer, or above $150,000 if you are married filing jointly, the IRS begins to slowly reduce the amount of the senior deduction you can claim. This reduction happens gradually, meaning you may still receive part of the deduction at first, but the higher your income goes above these limits, the smaller the benefit becomes. If your income rises too much, the deduction can disappear completely, even if you are fully eligible by age. This surprises many seniors because the income increase may come from sources they do not think of as regular income, such as required minimum distributions, pensions, or investment withdrawals. This phase-out creates a serious income trap for retirees who take large IRA withdrawals, sell investments, or receive one-time income in a single year. Even a modest increase in income can push you past the phase-out threshold and cost you hundreds or even thousands of dollars in lost tax benefits. That is why income planning is critical for retirees, especially those close to the $75,000 or $150,000 limits. Spreading withdrawals over multiple years, timing income carefully, and understanding how different income sources affect your adjusted gross income can make the difference between keeping the full senior deduction or losing it entirely. Other important 2026 changes every senior should know. IRS assistance challenges. The IRS workforce has been significantly reduced, which means longer wait times at helplines, potential delays in refunds, fewer in-person assistance options. Start your filing early and be sure to use direct deposit for the fastest refunds. Social Security COLA increase. Social Security benefits received a modest 2.8% cost of living increase for 2026, adding about $56 per month on average. But higher Medicare Part B premiums may offset some of that increase. This means tax savings like the senior deduction are even more critical for retirees' overall finances. Medicare, RMIA income-related, Medicare premium surcharges, IRMAA, are still based on income from prior years. If your income spikes due to big IRA withdrawals, your future Medicare Part B premiums could be higher, even if your tax bill is lower today. Be cautious with income timing. What steps should you take right now? Here's your action plan for 2026 tax season. Step 1. Start filing early. Don't wait until April. Start as soon as IRS filing opens. Step 2. Gather all income and deduction documents. This includes Social Security, 1099's pension, or IRA statements, Medicare premium amounts, any other income documents. Step 3. Talk to a tax professional. If your income is near phase-out limits, if your income hovers around $75,000, single, or $150,000, joint, you might benefit from planning strategies to optimize deductions and income timing. Step 4. Use IRS tools for assistance. Use IRS online tools to check refund status, verify filing, and find forms. The 2026 IRS Senior Tax Relief Update isn't just a small change. It's one of the most significant senior tax breaks in years. With up to $6,000 extra deduction for individuals, up to $12,000 for couples, high standard deductions, adjusted tax brackets for 2026. Many retirees could save hundreds of dollars each month, keep more of their Social Security income, and reduce federal tax liability like never before. This is crucial for fixed-income seniors dealing with rising costs of living, higher premiums, and stretched retirement budgets. But keep in mind, income phase-outs can reduce or eliminate the benefit. IRS staffing challenges may slow refunds. Careful planning is essential. We'll continue tracking updates, so stay informed, review your tax situation early, and take advantage of every dollar of relief the IRS is offering in 2026. If this information helped you understand how the 2026 senior tax relief could impact your money, don't keep it to yourself. Share this video with friends, family members, neighbors, or anyone age 60 and older who could benefit from these IRS updates. Many seniors are still unaware of these changes, and one share could help someone save hundreds of dollars a month. If you have questions, concerns, or want to share your own tax experience, leave a comment below. We carefully read every comment and respond to help clarify what this means for you. And most importantly, subscribe to the channel and turn on notifications so you don't miss future updates, deadlines, or changes that could directly affect your Social Security, taxes, and retirement income this year and beyond.